Hello, dear traders. My name is Clara, and these are the main trading ideas for the current trading session. First of all, let's discuss the situation with the US dollar. The dollar index is trading at 106.90. Market participants are analyzing the January inflation data published the day before. In annual terms, the consumer price index rose from 2.9% to 3%, while the core index recovered from 3.2 to 3.3%. Thus, inflationary pressure in the American economy turned out to be the most serious in the past year and a half. Commenting on these statistics, the head of the U.S. Federal Reserve, Jerome Powell, was forced to admit that the regulator has not yet achieved success in the fight against inflation, so the current monetary policy should be kept unchanged. Other officials agree with his opinion. Thus, the head of the Federal Reserve Bank of Atlanta, Raphael Bostic, said that in the near future, the department will not be able to lower interest rates again due to the continuing uncertainty after the introduction of Trump's trade tariffs. Against this background, the growth of the dollar may resume. Next, oil. WTI crude oil is trading at $71.40 per barrel. The U.S. oil reserves data is putting pressure on the quotes. According to statistics from the American Petroleum Institute, oil reserves increased by 9 million barrels last week, while the Energy Information Administration of the U.S. Department of Energy reported an increase in reserves by 4 million barrels compared to 8.6 million barrels 2 weeks earlier. In addition, President Trump announced reciprocal tariffs. Earlier, Trump announced his intention to raise tariffs for countries that levy import duties on the U.S. This scenario increases concerns about a global trade war that could slow the pace of global economic growth and negatively affect demand for hydrocarbons. According to analysts, the decline in WTI may continue. And finally, dollar against yen. The pair is trading at 152.70. Yesterday, wholesale inflation data for January was released. In annual terms, the indicator rose from 3.9% to 4.2%, more than analysts expected. It is worth noting that the indicator has been growing for the fifth month in a row, which increases the likelihood of further tightening of national monetary policy. Currently, most analysts predict that officials will raise the cost of borrowing to 0.75% in the middle or second half of this year. Thus, the prospect of further tightening of national monetary policy will continue to support further strengthening of the Japanese currency. So, these are the main trading ideas for now. Thank you for your attention, and don't forget to subscribe to our YouTube channel.